Hey, Joe McCall here. Welcome to the Real Estate Investing Mastery Podcast. Glad you're here. Today, we're going to be talking about how to fund your land deals. And let's talk about it from a different perspective. Let's talk about it from the perspective of somebody who actually lends money on deals. And how do they underwrite your land deals, specifically land here? A lot of what we're talking about, you can apply to houses as well, right? So, we prefer to fund the deals, to actually take them down, to close on them, so that we can close on them in 30 days and then turn around and resell them. It just makes everything easier, right? With all of these licensing laws that are being passed in different states, making it illegal, immoral, and fattening to wholesale properties that you don't own yet. It's hard to put them on the MLS. It's hard to get a realtor to help you if you don't own it yet. So whatever. This is what I've been saying for the longest time. Let's go ahead and take the properties down. Let's buy them. Well, you don't have to use your own money if you don't have any to do that. You can use OPM, other people's monies. And there's a lot of funding companies out there. And we've got a guy today. His name is Logan Swanson. We're going to be talking about how he actually lends money on deals, what he's looking for, and how he underwrites the deals. What are some of the things that when you're presenting a deal to a private lender, an investor, somebody to partner with, a land funding company, whatever, when you're presenting the deals to them, what are the things you need to be aware of and show them so that you look like at least you know a little bit about what you're doing, right? You're not sending them junk. You're sending them really good properties. And this also helps you then in the offer making phase, right? When you're looking at properties, you're evaluating them and you're trying to figure out what to offer. That's what you need to be focusing on. So this is going to be a great episode. So stay tuned, buckle up. Let's bring Logan Swanson on. Logan, how are you?
I'm great. Thanks for having me.
Glad you're here. You are with a couple different companies. The LandFixer is your main podcast. You have a podcast about land investing, right?
Yes, sir.
Awesome. So talk about, just real quick, how'd you get into land investing? What were you doing before that?
Yeah, kind of the same dopey story you hear from a lot of folks. Wanted to quit my day job, wanted to get into real estate. I'm here in Dallas, and everybody said the home wholesaling market was saturated, and I didn't have enough money to compete there anyway. So, I started with pretty much nothing. I was bartending at night and project manager for a construction company during the day. And I borrowed a couple $1,000s, zero interest, from a friend of mine to start my company. And that was about 6, almost 7 years ago today. And it went from flipping desert squares, got closer to DFW, then kind of went all over the map. And it got to the point where I was well connected enough where I was like, hey, let's just let people bring the deals in. We fund them. And it was more of a community service, in my opinion, because I got to underwrite a lot of deals. And really everybody we partnered with kind of came like a de facto, I don't know, you wouldn't say coach and student, but, I was able to consistently help folks that I was funding who are maybe newer to the space. So that's kind of where we developed, got into marketing and a couple other things along the way.
All right, cool. And how long ago was that again when you started doing it?
2018. So 6 years. Yeah.
Could you give a guess approximate of how many land deals have you funded since that time?
So funding, we started about a year and a half ago. We've done something like 70 deals, though we do have one big development in Tennessee right now. That's going to be about another 24. That's just coming to market. So we're really excited about that one. Before that, in my land flipping days, probably about 250, maybe 300 properties flipped over that, 5 years that I was a full-time flipper.
And when you were flipping, what kind of properties were you flipping? Rural, infill?
Everything. That's kind of what I prided myself on, and it was ultimately what made it the biggest headache. I think I was kind of a product of the time. We were doing the COVID heyday of land investing. We went all over the map because you couldn't miss wherever you went. And then right when that started to slow down, I started looking at this huge inventory. I was like, I have like 50 properties right now spread out all over the U.S. I have to sell. That became its own headache. But now we're pretty selective. We stay pretty much in Texas, a little bit in Tennessee. And I still like doing rural deals, but not small squares. Big rural deals are still great. One of my highest profit deals was a half a square out in Brewster County, Texas. And man, I love those. They're still excellent. In fact, I know a guy who he started before me. He worked in 2 counties, both of them in West Texas, and he never changed. There was no reason to. He became such an expert in that one area. He sold hundreds and hundreds of property, owner finance, sort of 99 down, 99 a month. He's happy as could be. He has the simplest land investing company I've ever seen. It cash flows like a pig,
Yeah.
So, but yeah, I mean, now it's usually about an hour and a half outside of a major city in Texas.
Okay, nice. And with your own deals, do you sell them for cash or owner financing? You trying to get the cash flow?
Both. Really a goal. Now on the one-off deals, we're mostly shooting for cash. Really anything over 40,000, we're trying to get cash on. Ideally, if you can do it in 6 months, you'll get cash. But if our properties are extending past that 6-month threshold, they're not selling, we'll usually start entertaining owner financing. But we buy some properties now still that are just geared for owner financing. If you're operating in the sub $20,000 price point, you can still buy some of those lots for like $2,000, $2,500, and you can owner finance those and be cash positive day one. Between the down payments and a doc fee, put interest on it, and you can cash flow for like 5 years.
Yeah.
So those are sweet, man. We still like to scoop those up. Anytime we are operating in a Texas county, I go to the little towns, and I try to scoop up little infill lots or lake lots in that area, and those are ideal.
I know you'll probably like this, but I've always found Texas to be a little intimidating because it's hard to get comps, right?
Yes.
And so what do you teach, or what do you recommend? How do you get the comps for properties in Texas?
Well, we're at the point now where we don't really go into new areas very often. So what I tell folks now is don't go a lot of places. You need to kind of be an expert in 1 or 2 counties because comping is very difficult. So if you're trying to spread yourself out across the map in Texas, you're just going to constantly be learning expensive lessons.
Yeah.
So right now, the best thing to do is know a few solid agents or brokers that you can either pay for MLS comps or work close enough with you to provide them for free. That's your best source. Then you typically look at on market and apply some sort of factorial. For us, it's usually around 75%. That's what we're seeing. If we list a property in Texas, it's usually selling for around 80% of the retail asking value. So that's a good rule to operate with. But the best thing to do is
you're going to sell yours at 75 to 80% of what everything else is selling for, or currently listed.
Of my retail. So if I go in and say I'm trying to match what I'm seeing as the retail value, I'm trying to list it where everybody else is listing it, or maybe slightly below it, right? Typically, the offer that I received that I'm going with in the last 60 days is around 80% of that value.
So that's the offer. I'm sorry. That's the offer you're sending out to the sellers.
No, we buy all of our deals. So we're usually buying at 40%. I'm saying I have a property, I bought it for 40, 50,000. I'm listing it for 100,000. The offer that we're usually taking and accepting and walking away from the table with is around 80,000, around 80% of our retail list value. In this current market, that's going up and down. But right now it's, this actually, this really informs us on the funding side because we fund a lot of deals. We're tracking these metrics internally. When our partners come to us, they say, hey, this property's worth 100,000. We kind of know it's going to go for around 80% of what they're thinking. And then we see pretty much the same thing in our business.
Okay, good. I love it. So you guys do deals yourself, but you're also lending money to people who bring you deals. And I wanted to talk about what are some of the things you look for? What are some of the mistakes that you see people make? And how does somebody bring you a good deal? What is a good deal for you guys? Does that make sense?
Yeah. So, probably the hardest part about funding is it's sort of tripart in your underwriting. You're underwriting the deal itself, just the property as it lays, trying to determine a retail value for it. You're trying to evaluate the returns on that. So you're looking at your calculator to see, okay, if I insert myself and I use my capital, and we have title companies over here, and we have to pay a surveyor at some point, what are we actually going to walk away with? So then you just have that sort of internal calculation of, is it worth my time and my money to invest in this deal? But you're also underwriting your partner. For us, we still lean on our partner to be the chief marketing driver in the deal itself. So a lot of the times what we're underwriting first and foremost is the person, right? So we have sort of a detailed application process. They have to stay within our system, provide us good comps, all that stuff sort of helps facilitate it. Anyways, to the deal itself, for us, we have to kind of rely on selling cash as a funder. So we have to be very picky with what our retail value is. And our loan to value is about 50%. So if someone says this property is around $100,000 retail value and we believe it, we're probably funding up to $50,000 on that deal. If you go above that margin, say you're willing to fund it 60%, but our internal metrics are telling us we're selling for probably more like 80% of the retail value, all of a sudden what looked like this huge spread on the deal is actually shrunk down dramatically. Then you start incorporating closing costs and things like that. And what looks like a big spread can really widow itself down dramatically by the time you get to the closing table. But it's not a bad thing if you start with the right price point. And that's kind of why we were talking earlier before we got on the call about the two different types of lending that we do, whether it's the sort of the JV profit share or if it's the fixed rate option that we have.
All right. So what is the JV share? When you lend money on a deal, you'll partner with people on it sometimes, right? How does that work?
Yeah. So it's pretty standard. I mean, this is what I walked into when I started investing 6 years ago. I needed money partners, and the money partners are like, hey, I'll fund it, but I get 50% of the profit. And boy, that's a lion's share. Now, they were taking a gamble. I kind of understand it from the funder's perspective these days, because every time you're working with a new person, you have no idea what that relationship's going to be like. They could disappear into the night. You know, you do encounter hairy deals. I've funded deals that have kind of gone sideways. I've lost money on deals through funding, and the partners tend to disappear, right? So, you know, it's expensive, but if you're relying on someone else to underwrite it, you know, that's what we do. We underwrite it. So if we fund it, we're telling you we think it's a good deal. We provide the money. We assist with marketing. But for us, that profit share starts at 30%. So we start at 30%. That goes up 5% quarterly. So every 3 months, the property doesn't sell. We go up 5%. And if we get to a year and that property hasn't sold, that's when we have to, kind of look into defaulting. Because chances are we underwrote a dud and we have to scream sale that puppy and get it out of the books.
I've seen some funding companies, and this is what I've done sometimes, is I will actually buy the deal in my own name and then do a JV agreement with the person who brought me the deal. Does that?
Yes, we take title on. Yes. Typically, I should say about 95% of the deals we've taken title on. Now, we have funded some bigger ticket properties, some properties that did have some forced appreciation in them where the partner was bringing capital. And anytime there's messy capital where maybe they're contributing some and we're contributing the bulk of it, then we're willing to share title. So we've done tenants in common in that scenario. But for the most part, if we're funding 100%, we're taking title on that property.
Maybe you don't have to answer this if you don't want, but are you using your own money, or how much of other investors' money are you using, or do you have lines of credit? I'm just kind of curious how that works on that side.
Yeah, so I have one partner in the business, and he has a pretty big collection of homes, rental homes. So we typically draw on his line of credit. I do have other options. If say we have a development that comes to bear, and we're kind of at capacity, like sometimes these subdivision projects can be millions of dollars, right? So in that case, I do have funders that we're willing to bring in on the deal. That can be complicated, though. It kind of doesn't run through land partner funding anymore. It kind of becomes its own LLC, and it's a bigger deal at that point. But for the one-off deals, our line of credit is perfect. My partner, it's easy to draw off of. It's readily available, and since he's underwriting the deals himself, it's full confidence. I don't have to have some passive partner somewhere who's just trusting me. My partner goes through and approves every deal with me.
Okay, cool. Let's talk about underwriting. What are some of the things you look for in deals, and what are some of the big mistakes you see?
Yeah. Well, the most obvious, we have some pretty much across the board denials. The ones that I say when I'm underwriting a deal, I'm trying to kill it as fast as possible. So I start with the most obvious things that would kill the deal for me. And that's like, all right, if the property's fully in flood, if there's access issues, slope is a big issue in a lot of the properties I've been seeing recently. A lot of the dregs of, say, mountain subdivisions are just properties that are too steep to do anything with.
Sure.
Junk, debris. Those are the most common issues. Floodplain, if I didn't mention. But then after that, if it kind of checks all those boxes, that's when we start opening up Redfin and Zillow and looking at comps and things of that nature to see if they have it under contract at the right price point.
So they got to have it under contract, obviously.
Yes. Yeah. We don't want to look at anything that's maybe I'll get it.
General rule of thumb, they need to be at about 50%. The most you'll lend is about 50% of what you feel like you could sell it for.
We've gone above that, but we just have to have like very explicitly clear comps. The 50% allows for fudge. Whereas if you start having, and we've done it, 60, 65% of retail value. But the sort of things that we see is like, hey, this is someone who's been through this area multiple times. They have not only comps that are on MLS, but they can show me, hey, I bought and sold 6 properties in this subdivision. I already know a broker who has a bunch of people ready to buy it. We've also funded deals that were under contract on the sales side, and they wanted someone to step in and hold the property for a couple months while it went through surveys or whatever else. So if we go above that 50% threshold, we just have to have a whole lot of confidence that the property is going to sell quickly and for the value that they're telling us.
Okay, so talk about how do you get that confidence? What makes you feel warm and fuzzy inside and like, okay, good, let's do this?
Yeah, so that's when you get into like true comping. True comping on land is a little more difficult than you might think. It's not just pulling, like there's services out there called Priced and a number of other ones that sort of aggregate any properties that are in a similar price point within a certain number of miles, and that's where they come up with a per acre value. And that's really not the best way to do land. You can get burned doing that. So where we start is we identify like, all right, who's the ideal buyer for this property? If it's it's a home site somewhere near DFW, okay, it's probably going to be a builder. If it's a lake lot, well, maybe there's a community or a cost of builder near there. If it's a recreational lot, well, it's probably going to be a hunter, et cetera, et cetera. So you identify the best and highest use for the property, who that buyer is, do a little research to make sure that that person exists, right? Because sometimes it doesn't. And then you really try to find property comps that align with that. So instead of looking at any 50-acre property, say, and that's what we're comping against in Tennessee, you have to look at Tennessee properties that are actually suitable for those exact purposes that your property is. For home sites, that's, say it's a mountain home site, what people are buying in North Carolina. Here's an example. If someone, because we do a lot of these North Carolina mountainside home sites, what people are buying isn't just the land and its proximity to something else. It's the views, right? So you could have 3 or 4 properties that are all very close to each other with very similar comps, and one sold way higher and one sold way lower. And the reason for that is because of the view. And a lot of people don't know to look at that. So you have to go into Google Maps and you kind of have to so once you determine who it's for, the exact details of your property, so that's the road access, the quality of the road, the utilities, the slope, the drainage, the floodplain, all those sorts of things that line out on a due diligence report. Then you have to compare apples to apples to the best of your ability. So you should only be comping that property next to properties that are similarly flat, similarly accessed, similar utilities. And that gets you as close as possible to how you can comp.
All right. So I've done that a lot. When I'm looking at comps, I try to find the property in Zillow and Redfin, get as close as I can, and zoom slowly out until I find similar properties, and look at average price per acre or median price per acres. Sometimes you can get too many comps, and if you get too far away, it kind of makes it hard. But I love that. So one of the things I've told people too is if you present this deal to a private investor who's experienced in land or a funding company that does a lot of land, they're a great filter. Because if they won't lend money on the deal, right, you probably shouldn't do the deal. You should probably pass on it. But at the same time, Logan, you don't want people just bringing you any deal that they find to make you do their work for them, right? Like, um, so you talk a little bit about like you did already. It's got to have road access, can't be under floodplain or whatever. But what are some common mistakes that you see people bring you these deals? Do they not give you enough information?
Yeah, that's probably the biggest issue. So you're kind of getting into underwriting the partner. So the person that brings you the deal, you're kind of getting into bed with that person for a little while. A lot of our, kind of a 30 to 90 day timeline for turnaround is ideal, but a lot of these, they'll stretch into, 5, 6, 7 months, especially in this market, things are slower. So what we're looking for is we actually designed the application to do a lot of this for us. So if you apply for funding on our website, we're going to ask for your due diligence. We're going to look at your contract. We have you upload a signed copy of your contract. That's a good indicator. If someone has a junky contract, they might not know what they're doing, right? If their due diligence is really just a priced sheet that's uploaded, or that's all the comp research they provide us, that's a big indicator that they probably don't know the market very well. We ask them if they've done deals before in that area. And if they say no, okay, well, we have to kind of weigh that. I prefer to work with somebody who's sort of experienced, at least in the state, maybe not ideally the county. But besides that, one of the big things that we're also looking for is they should already have a broker contact. Like in this day and age, you should have a realtor or a broker that you're already talking to. That's part of the due diligence before we send any sort of acquisitions out. That's one of the big things that we offer is I've done a lot of coaching on folks, just how do you find a good broker or a good realtor? So if they've done all those things, they have good comps, they have a good realtor, their due diligence actually itemizes all the things that would be a chief concern, et cetera, et cetera. Well, the cherry on top is we request them to record sort of a Loom video that overviews the property. So they pull up the property and they get on Google Maps and they explain the pros, but more importantly, the cons. I want them to be able to be as straightforward and genuine as possible and acknowledge anything that's kind of a downside on the property, because most properties have some downside to them, especially if we're buying them at a discount. Usually there's something that makes it a little hairy. So we want that addressed. We want to see that they are experienced and knowledgeable enough to identify it, bring it to our attention, and kind of already have a solution or an explanation for how we're going to address that in the dispo cycle.
Interesting. That's a great idea, getting them to do a Loom video about that. Talk a little bit about how do you find a good realtor, a good broker? Yeah.
Well, they're kind of rare, actually. I mean, especially in land, right? Here in DFW is a great example. I think there's, I don't remember the exact stat, but I'm pretty sure it was there is 2 realtors for every one transaction. No, 2 transactions for every realtor in Dallas in a 6-month period. So they're everywhere. And most of these people do 0 or 1 transaction a year. So if you just go into a Facebook thread and say, hey, does anyone know a realtor in this area in some buy-sell group, whatever, or go to Google, chances are that you're just going to start running into people who maybe have done a few transactions. Some have no transactions, but very few are going to have a lot of experience with land itself. So we always advise folks hey, put together kind of a script, right? Try to pick 3, 4, 5 questions that you can quickly ask a broker or realtor that will tell you if they're good or maybe not a great fit for listing and selling your property. For us, we really like folks that have been born and raised in an area. Land is almost always going to have some sort of history behind it. It used to look like this 10 years ago, and then so-and-so, built this over there and it changed or modified it. I like locals. I like locals with connections. So that's one of the first questions I ask is hey, if we had to do any improvements, do you know someone who could put a driveway in or clear the lot for us? And if they say, oh, yeah, absolutely, and they start naming names, that's a really good indicator that they've done land transactions before. Then you ask them explicitly, have you done a lot of land transactions? And if so, how do you market and show properties? That is its own trick. If you've ever, my first subdivision, I was the guy who sold all the property. So I met people out at the property on a regular basis. And I realized it's kind of a challenge to actually walk someone through a property, explain the vision to them, especially if it's 10 acres and it's wooded. and that's not uncommon for our industry. So they'll usually have some techniques. I kind of ask them how they develop marketing material. And as you're talking to them, you kind of just start typing this information out. And if you have 5 questions, I'm trying to make sure I'm in frame here. If you have 5 questions and you talk to 10 realtors about it, you can actually create a spreadsheet and check whether or not these people have answered these questions well. So I always suggest getting in touch with anywhere between 10 and 20 realtors before you select the person that you want to work with. Because ideally, you're establishing a long-term relationship. I don't suggest kind of jumping from county to county and state to state. I suggest picking a few areas and settling in, because that's where you can then become an expert, have some seasonality in, and establish relationships that are going to transcend any individual deal. It'll go beyond that, multiple deals, 10s, 20s, 30s,
So, yeah. So explain again, where do you start looking for those realtors?
For us, I first start with my network. So here in Texas, you can go to any Facebook group. I mean, I guess it's probably anywhere in the country. Go to any of the land Facebook groups and start with like, hey, does anyone have a great realtor for this area? I really like getting suggestions from my network. If they give me some suggestions, I'm going to start with them. But I also have my admin go and call the people that rank on top of Google. I also have them go to lands.com and see who comes up when you're searching for those properties in that area, especially if they have things that are land related in their description. That's a good indicator. And then I also look at, say I'm looking to buy, like every mailer or acquisition cycle should have its own very specific product you're in search of. You're not just randomly blanket sending mail to an entire county. Ideally, your mailer is going to be like, all right, I'm looking for development properties in somewhere in East Texas, in Hopkins County. So I'm not blasting mail anywhere. I'm looking for properties of a certain size that are running either north or south of I-30, and you start putting restrictions on it, and you kind of get an idea of the exact sort of property you're wanting to buy. You then go and try to find that property on lands.com, Zillow, whatever. And the realtors that have those listings are a great person to go talk to, because ideally someone might have done that homework for you. So if you contact people who are already listing similar properties in the area that you're moving into, it's a great place to start. And especially if they're on lands.com, because I don't like paying for lands.com. I want my realtor or my broker to pay for lands.com.
I usually always start with land.com, like you said, but I also just like to go to homes.com and look for land in this certain area, recent solds, and you'll get a ton of vacant land listings that have sold recently, and you can get the contact information of all the realtors there that have sold land in the last 6 months. And just write down all their contact information and call them all. You can find the listing agents and the buyer's agents, names and phone numbers and emails. It's a great place to start. But I like that idea.
Shortcut. Yeah.
I like that of looking the ones that can already advertising on land.com and the family of websites there. I mean, those guys, they're spending $500 to $1,000 a month to advertise on land.com.
Not cheap.
No. And they're local.
It's more than that. I think the new subscriptions are starting at like $700. I heard people paying $1,400 a month for 10 listings and stuff. I mean, it's out of damn control. Yeah,
it's crazy. And why people are still doing it, I don't know. But it's a number one place people go to list their vacant land, and
yeah, exactly.
There's a demand for it.
Yep.
Yeah, I love that.
And that also will be informative of their quality of photography. Like, did they get a good drone footage up? Is their description really well done? Do they actually, are all the details even filled out? I mean, some of these people put zero effort into listings. It's bizarre.
Yeah, that's a good point. If they have Google Street View maps in their pictures or
GIS
or satellite image, you don't want to deal with them. Okay, so you sent me a link here to some cool things at the LandFixer.com, 5-minute underwriting. Can you go through that a little bit? I know we've already touched on a lot of this, but kind of talk about that.
So the idea is, this is kind of something that I had to build out of necessity for myself. I kind of put it together in a slideshow for your audience here, but this is exactly what I do when I get a new application for my funding. The idea, again, is to kill the deal as quickly as possible, because when you get to a certain level, I think any of us in any level of real estate, you get to a certain level where now your time is the biggest commodity that you have, right? So for me, if I spend an hour underwriting a deal that was obviously in floodplain and I just missed it in the beginning or something stupid like that, I'm in trouble. I'm not doing my job very well. So I need to be, I need to guard my time really well. So I put together this sort of 5-minute underwriting template, and we can start pretty much at the beginning. Like the first thing, I guess we're going to identify problems. The biggest thing that
Well,
people are
I
struggling
shared
with.
my screen here, which has your slideshow in it. Do you see that?
Oh, sick. Okay, perfect. Yeah. So boom, there we go. There's the outline. Map it out. Find the easy deal killers, simplify it, find out your buyer, comp it, and then create a realistic retail valuation. And what we're trying to do is we're solving for the most obvious things, like I was saying, the time waster, but really the biggest one is number 3 is not being overly optimistic in your retail valuation. You really do not want to buy a property with a hope and a dream that this is going to be worth a lot more than you think it is. That is where you start getting into real trouble. You're holding on to properties way too long. Every once in a while, I'll get into a series of phone calls. I do this. I kind of reach out to the community and say, hey, is anyone struggling right now? And maybe I can help them with 5-10 minute phone calls. And it almost always comes back to number 3 is they overvalued a property. And now they're at a point where if they short sell it, it kind of kills their business because they only started with 30 grand to begin with or whatever. And for us, that kills our funding. We jam up our pipeline anytime we buy a property that sits in inventory way too long because we might lose money on it or not make the money necessary to cover our debt expense. So the first thing, mapping it is obvious. But there are different mapping services that are well worth it. Getting something like Land ID, Land Glide, or if you really don't want to spend any money, you can do the 3D Google Maps and get a lot of this stuff done as well. But big things that can catch you up if you're new is not knowing to look for floodplains. Utility easements in Texas can be a big deal. Zoning, school districts, water features are awesome. Another one that I've been using a lot recently is the well feature. Can, if you're buying land kind of in the middle of nowhere in Texas, you can assume there's probably not water nearby. And if you see, a bunch of wells nearby, that's a pretty safe bet that you're going to be able to drop a well on your property. But if you buy a property and there's no wells around it, you could be in trouble. We've dealt with that issue before. But I start with literally, if I have no experience and you're coming into this with no experience, just go turn on every overlay, either one at a time or all at once, and kind of see all of the data that's being handed to you. School districts, different parks, what's owned by the state, what's owned by the county, city lines, where it's the city limits. That's a big one. And you'll start seeing things that, like Florida wetlands, they're distinct from floodplain, right? But you'll start to see the things that a mapping service will suss out very quickly. And if you're in a new area, you'll probably catch 95% of the issues before moving forward. So this is the easiest way to kill it. And then you just kind of start zooming out on that property and you start taking notes of what's around. If this is a recreational property, people always want to know where the closest Walmart is or the gas station or whatever features are around, state parks, etc. So you just kind of zoom out slowly but surely and you start taking notes on what you're seeing. Is there value around this parcel other than the parcel itself? Because most of the time when you're selling vacant land, you're actually selling a dream or the future intent of that property a little bit more than you're selling the property itself. So zoom out a little bit, and then you start looking for the easy deal killers that maybe aren't going to pop up in the overlays on a mapping system. The biggest one is access. And I think one of the guys, I don't know if you're familiar with, what is it, Fridays, REI Fridays or something like that. They will only buy a deal if you can see it from Google Maps Street View. And that kind of blew my mind because when I started, I worked in a lot of rural areas. And it caught me up a couple times where you pulled it up on a GIS map and there was a road straight to that property, no problem. But it was so rural, Google Maps didn't follow it. But if you follow that road out to the highway, it's gated. I had that issue a couple times, right? So access that's unencumbered is huge. And ideally now we don't buy anything that doesn't have a road to it. We don't buy easement access stuff anymore. It's not a deal killer for a lot of folks, but you just have to be strategic about it.
Sure.
And there are some states that allow for you to maybe going too far there, but you can gain access if you don't have legal access. And that's its own business strategy right there.
Yeah.
But you're looking for wetlands, floodplain, irregular shape. This kind of brings you to the conversation of who your end buyer is. But it's kind of funny. You'll see some really crazy looking parcels when you start digging around GIS maps on a regular basis. It's kind of nuts.
Oh, yeah. Yeah, I saw somewhere, I was just looking recently, and there were these lots that were long, super long and skinny.
Yep.
They were about maybe 20 feet wide and maybe a half mile long. It was the weirdest, most bizarre thing. And I don't know what it was.
Yeah.
That's something that's a little irregular.
Yeah. Divided interests, for sure. But even like, think about it in a residential sense. There's, for example, there's subdivisions where they subdivided lots for home building, but they structured the easements in such a way that if you got an irregularly shaped lot, you can't actually build on it because the setbacks from each road is a certain. It's funny, actually. That's another long story, but I worked in a subdivision where I was buying and selling land very, very cheap, and the people had no intention to ever build on it because you couldn't build on it because of the setbacks. But they did want the street address to get their kids into a specific school. So people were buying these lots just to get the address to put their kids in a certain school.
Wow.
Yes, there's still buyers out there, but you have to be very careful. So then, if it's kind of past all those different steps, there's no easy deal killers. You mapped it out. It looks great. And you've taken some notes there. Well, now is when you're really trying to get into like, how do I comp this property? And again, when we're comping, we're trying to do apples to apples. We're not just doing arbitrary per acre in a certain mile limit or anything like that. So this is where you start taking note of, all right, is it flat? Is it rolling? Does it have views? Is there a water feature? Anything that you think could affect the retail value of this property, whether up or down, you want to scribble it somewhere. And this can be really quick. It can take you 30 seconds to pretty much absorb most of these features. Here I listed the shape. Is it cleared or not cleared? You can look at soil types. That's actually a really neat feature of Land ID and I think a couple others.
Yeah.
And you scribble this down so that when you're looking at other properties, you have a quick reference for if you're comping or comparing it to one property, yours has a water feature and this other one doesn't. Well, maybe yours has a justification for a slightly higher value. Or you're looking at a property and you're wondering, why is this one like so high above market? And you find out it has a waterfall or a cave on it or something like that. And you're like, okay, well, I should nix this. And then you're looking at the big question, like who's the buyer? Because ultimately we don't list a property on the MLS and then it's not bought by some arbitrary figure somewhere. It's usually bought by someone who has the intention, maybe they never do it, but they have at least the intention of utilizing the property, right? So if you're buying a lake lot in Texas and this property is really close to the amenities and it's right next to the boat ramp, well, those are things that really stand out because the person who's looking to buy that property is probably going to value those things highly. Or if you're buying a property that's 100 acres and you really only see its use as recreational and your ideal buyer is a hunter, well, that's actually too small. It's kind of hard to hunt just 100 acres if you're comparing it to all the parcels around it. So if your ideal buyer for a 100-acre parcel somewhere is a hunter, that it's not the right size, well, you need to really take that into account because they might be motivated to go buy something that's of the right size and not necessarily your parcel. So you can make it pencil out looking at the retail values and the price per acre, but it may not have a real buyer for it, or at least not a long line of them. So,
okay, cool.
Yeah.
Next is
who the buyer is. Yes. Yeah. And this is where you take all your combined information and you put it on a spreadsheet. I don't think there's any specific best or highest way to comp parcels, but there are some things that you can't ignore, right? So you need to, if possible, not all states allow this, but if possible, you need to look at sold comps and not for sale comps. You want to put them all out on a spreadsheet. You want to write down, what it was listed for, what it sold for, the acreage, and days on market. That's a really big one that I think gets ignored way too much. We can justify the retail value of almost anything, but if it took 4 years for that property to move, that's not a market you probably want to operate in and shoot for that retail value.
Right.
So you just gather as much of that information, you put it down, and as you're putting each comp down, I usually put a link to that individual property so it's easy to reference if you need to. And I'll put notes. This is where you kind of go back to that previous, I think, slide 3 where it says take some notes. So if the comp has, it's flat, cleared, has road access, that's good, and utilities, make those notes and keep going. And you'll find that you can kind of apply a factor to all of these comps based off of what is most important to your end buyer.
Right.
So if your end buyer is looking to build a house on it, well, they're probably going to really want to have roads, utilities, a school district, things like that will really matter. So those are the sorts of things that you're going to weight highest when you're looking at comps. If they check out and they have all the qualities you want, that's an A comp, and you give that 100% value in the weight of your comping. If it's missing 1 or 2 of those features, it's a B comp, and you'll apply some sort of factor to lower the value or the weight of that comp in your formula. But ultimately, you're just going to aggregate these comps, weight them, and then you're going to do some sort of median or average function to give you a price per acre. Median or average, divide it by acres, and it gives you a price per acre.
Whenever I'm looking at median versus average, just whatever number's lower, that's the number I use.
Yeah, exactly. That's actually exactly how it's built into my spreadsheet. Is it's got a median, and it's got an average, and they just are next to each other. One is not better than the other. It's usually what's most realistic. That brings us to number 6. In this day and age, especially if you're looking to flip land, one of the things that you need to weight very heavily when you're addressing the retail value of a property is that timeline. It's that days on market. It's if I list this property, it's got to be almost below everything else if it's of average quality. If it's exceptional, okay, then maybe you want to creep higher towards like a standard retail market or a top of market. But for us, especially if you're working with a funding partner who makes more money the longer it's on market, you're incentivized to move that puppy as quickly as possible. So for us, that's outlined in comp value. We're always as realistic as possible. You might say pessimistic as possible, not necessarily, but we tend to be on the conservative side when we're looking at every comp, when we're establishing a retail value. And that kind of final decision for us is a gut call almost every time, unless it's very obvious. But we sit and look at each other and say, hey, is this really 50% of a retail value? And if it's not, we're learning it's best to walk. I would rather do 10 speedy deals that sell quickly and we really dialed in that retail value than 20 long hold, confusing, up and down, emotional, swinging, taking up bandwidth deals. Even if I make more money on the long ones, I want to move quickly. That's our industry.
It reminds me of transactional funding. And have you ever used transactional, like one-day transactional funding for deals?
No, I've always bought my deals.
Something that we have for our students inside of our inner circle. Mm-hmm. Some of these properties, you can't get funding on them from a private funding company or from a guy like Logan because there's just not enough room in there. Yeah. But if you have a seller that's willing to wait and give you 6 months, you may be able to market that property while you have it under contract. And if and when you find a buyer, you could use our transactional funding to actually close on the A to B and sell it on the B to C on the same day. And we don't charge any money for that, which is crazy to think about. But I know I have some people that do that. They just, if the title company won't let you do an assignment, then you can use, if they require you to have money in escrow to actually close on it and then turn around and sell it. There are resources out there called transactional funding. So sometimes, when a deal, and I say this often too, like you need to put yourself in the mind of the buyer and what's going to make this deal so sexy to them. They're going to be like, oh my gosh, I'm going to drop everything and I'm going to go make an offer on this property. I'm going to go look at it. And it's mainly the price. Mm-hmm. And I see this over and over again. People are too optimistic with their values and with what they think they can sell it for. And if you just did something as simple as take the lowest 3 or 4 or 5 properties that are currently listed and get an average or median price per acre, whatever number's lower, and just multiply that number by 85%, and that's the price that you're going to advertise your property for, you'll probably sell it pretty quickly. I mean, that'll get you 85, 90% of the way there.
Yeah.
And I mean, that's where you start, right? You start from that. What's that conservative number? And then you subtract your numbers from there. You subtract your profit, you subtract realtor commissions, your funding fees, you subtract closing costs. I call it an oops factor. And you subtract photos or whatever. And then you come up with your number. General rule of thumb again, you don't want to be more than 50% for that number. And you do that, you can get those deals funded all day long.
Yes. Yeah. And I mean, that's usually like, I'm kind of a big-hearted guy. So people are bringing me these deals and they think they're like incredible and they're going to make all this money. And I tend to have to be the person to bring them back to reality and say, okay, I know you're seeing 50 grand of profit here and you think you're going to get 30 of it and it's only going to take 30 days or whatever. But that's just not how it goes in this market for the most part. Now it does sometimes, like, if I can share a success story, we had someone, I guess it was probably about 3 months ago. We bought a property. It was $72,000 on the acquisition. He said it was worth $200,000, maybe $220,000. And I looked at it, and it was in Ohio. It didn't seem like a very busy market, and I couldn't dismiss it. I couldn't go and find comps that said this wasn't going to sell at this price point. But I got in touch with the broker. This is something I do on almost every deal I fund. Is I talk to the broker or the agent directly, and I kind of beat them up, and I say, "What's your experience? If the partner's providing that broker or realtor," and everything seemed to check out. But I just had this feeling like, I don't know, man, it's a slow market. We'll see. Well, he proved me wrong. That property, we bought it $72,000. He used the fixed rate, like I was telling you about, and that thing was under contract in 20 days at full asking price. $199,000 is where we listed it, and he walked 45 days after we bought the property. He walked with $100,000 in his pocket. And it's incredible because nice. For every time that I have to have one of those like sad conversations where I'm kind of deflating someone who's really excited about a deal, I have one of those where it's just someone like their life just changed, to walk away from a land deal and we were able to help them feel very confident in it, and we supplied the money, and I mean that was insane, and yeah, it's just a real blessing.
It happens. All right, so let's talk about how people can get more information about you. Mm-hmm. And your company. You've got a couple websites here. Prime Land Exchange is one of your main ones. And this is where you do what?
Yeah, so Prime Land Exchange is where it's a listing service for other land investors. We're in the business of creating a unique audience of real estate investment-minded individuals that may not necessarily see land as an asset. And it really is. Like if you compare land to gold or a bunch of other places where you can put money, if you're picky and smart, especially in this market where cash is king, you can buy some really cool properties very affordably, kind of at a wholesale price. So our goal is to connect those real estate minded buyers with good properties that I think are safe investments. Nice. We also have a podcast there. That's the LandFixer podcast, where I kind of, it's not really geared towards land flippers per se. They do chime in. I just had Kendall Lejeune on last week. So we do have those sorts of folks on, but I'm really more interested in learning about all the things associated with land that aren't talked about very often. Like I have a soils expert coming on shortly. I've talked to surveyors. I have a big Texas broker that's going to be coming on and talking all about how they list land and market as brokers and agents, and all sorts of really cool stuff. Other funders, really whatever I can think of that interests me as it relates to land, I'm bringing to folks and really helping reinforce them make that purchase of a piece of land if they know it's a good investment.
So that's called the LandFixer podcast.
Yep.
And you also have here landpartnerfunding.com, landpartnerfunding.com. Talk about this.
Yeah, so that's for my land flippers, right? So if you need capital for your next flip, come check us out. We have two options. One is kind of that traditional profit share, and the other one's kind of our fixed rate where we charge points that increase monthly. Happy to talk about that. It's all zero out of pocket. We pay for everything, closing costs within reason, as long as they don't get too crazy. And then we also market that property using Prime Land Exchange. So they're kind of hand in glove. Your property gets listed and blasted out. I have a 30,000 plus buyers list that's growing every day. It gets blasted out on our social media channels organically. And we have a whole host of other things for land investors. I sell website templates. We'll go on and on, but just get in touch with me if you're a land investor and you need help marketing your property. I'm very capable and able to help you.
Good. And are you active on the socials medias?
You can find me.
People reach you there.
Yeah, you can find me on Facebook. You can also just email me directly if you want. TheLandFixer@gmail.com. That's usually where I speak with folks in regards to podcast appearances. But you can find me on Facebook. My company's on Instagram, TikTok, pretty much anywhere you look.
So I'm writing it down here in the banner, TheLandFixer@gmail.com.
That's it. Yep.
All right, cool. Thank you so much, Logan. Appreciate you having you on the show, and wish you the best. Hang on, don't leave here because I want to show you something here. But thank you, everybody. Again, appreciate you being listening to the podcast, watching this on YouTube. Appreciate you guys. Go check out Logan with those links and information. We'll try to put them in the show description down below as well. All right, we'll see you guys later. Take care.